Kurt, I am so excited to be having this podcast. And who would have known 4 years ago when I called you as my first guinea pig and said, "Hey, would you record a podcast with me?" And that we'd be doing our 101st episode. And I'm sure you were thinking to yourself, what is a podcast and what's it going to be used for? And 101 episodes later, here we are. So a few things have happened since we recorded that episode way back when, and would love to get this kicked off and have you tell us a little bit about yourself for those that don't know you, and then tell us a little bit about Cowen.
Perfect. Well, thanks, Jeff. It's great to be with you again. And I think the last time we did this, we were doing it over audio and not Zoom, but to your point, how things have changed. And again, great to be back on the podcast. By way of introduction, or reintroduction, I'm Kurt Haras. I'm a managing director at Cowen. Cowen is a full service investment bank headquartered in New York, publicly traded, the full suite of investment banking services. We have research, debt and equity capital markets, in mergers and acquisitions, in prime brokerage. In terms of areas where I spend time in the firm, it's in the merger and acquisition side. And most of my time is really spent in the industrials market, focused on what I'll call specialty distribution or value-added services. I've been with Cowen for 3.5 years. When we had done the first pod, Jeff was with Quarton International. And as you know, and as folks may not know, Quarton International was acquired by Cowen in January of 19. So it's been about 3.5 years under the Cowen umbrella.
Perfect. Especially distribution and industrials. How has that been affected in your world during the last 3 years? Kind of interesting. The Cowen acquisition happened almost right on top of COVID, right? And so what did that look like going through that time period?
It's been interesting. I think it's been great under the Cowen flag. I think they've done a nice job of bringing us into the fold and us getting more acclimated with the services that Cowen offers, which was unique relative to where I came from, which was largely a boutique investment bank, largely focused on sell-side merger and acquisitions. It's been good to be under a larger banner and being able to deliver more services to clients. In terms of the sector, Jeff, specialty distribution, it's a sector that is highly fragmented and it's been ripe for consolidation. So as a result, you've seen a lot of private equity interest in the space, looking for a platform opportunity and looking to consolidate what's otherwise a highly fragmented market. And as you look across what I'll call the distribution world in general, in a lot of cases, it's most of their privately held businesses, probably started some period, shortly after World War II. So you've got second, third generation family members, and some may not be interested in running the business. And you've got the patriarch or the matriarch continuing to run the business and looking for a succession plan. So I think on the private side, you see those dynamics, and you can argue that you see that across a lot of different industries. And then just in the world of private equity, it's, again, I think there's been, if you think about the areas in which private equity is focused, in terms of what we see, it's some manufacturing, but it's a lot of that distribution and services. Those dynamics play well for our clients, whether they're private business owners or private equity funds looking to acquire or exit portfolio companies.
Well, and I want to stick on Cowen for a little bit, just because I know as soon as we start talking about mentoring and all kinds of things, we can talk for hours. You and I have known each other quite some time and have a passion for that. But tell us a little bit about your business development at Cowen and how does that work? Is there any differentiators in how you obtain clients and work with private equity firms?
Sure. On the private, I'll split it roughly, figure half our clients are private business owners and then the other half are private equity funds. At least on the private company side, business development comes a few different forms. Obviously, on the one hand, you've got your trusted advisors that will bring you into an opportunity. Could be an accountant, an attorney, a wealth manager, or it could be a former client. And back to the mentoring, we're not going to get ahead of ourselves here, but if you do right by your clients, they tend to become advocates for you. In a lot of cases, if you work hard, deliver for your clients, those clients typically think of you in the context of future opportunities or introducing you to a potential client. So that would be on the private side. And on the private equity side, which was different at Quarton versus Cowen, we've got a dedicated sponsor coverage team at Cowen that's consistently calling on private equity funds. Historically, that was The way we were organized at the old firm was different and I think that's created a bit of focus on the private equity community. And our sponsor coverage team has been really helpful in terms of making sure that we're getting front and center of opportunities where there's a good fit with a given sector. It could be my sector, it could be obviously other folks inside of Cowen. That's a little bit about business development on either sort of client class, if you will.
And as you're talking to companies that are in your target industries that you specifically focus on, what are some of the things that they're struggling with right now? Obviously, supply chain, I'm sure a little bit on the people side of their business as well. Can you talk a little bit about what's happening in the industry and what you see over the next 12 or 24 months?
Sure. You hit the nail on the head. And that's really universal, irrespective of business model. It's really 2 points. It's really the labor, technical workers, and then supply chain. Where we kind of see differing, where some companies do better than others, is really around the ability to recruit, train, and retain. I sold a business a couple of years ago. It was part distribution, part service, and they had a sizable workforce and spent a great deal in training and workplace safety. And that business was sold to a private equity fund, and they've gone on to do acquisitions. And the unique thing there is they're consolidating a fragmented market, like I shared with you previously. So they've taken advantage of that as a platform acquisition. But secondarily, I was talking to the sponsor the other day, and one of the comments they shared was they recently did acquisition, and that target had a substantial backlog, but lacked the workforce to serve or fulfill that backlog. The acquisition by my former client was timely from the standpoint they had a well-trained and large workforce to be able to service that backlog. Those companies, those platforms that have that business model, again, of recruiting, training, and retaining people, really have a competitive advantage in this market and really can take advantage of opportunities. And that'd be a good example of companies that find a way in which to differentiate themselves in the marketplace.
And you get to work with a lot of companies and see a lot of entrepreneurs and private equity managers. What do you see as some of the key things that those leaders are doing? Or is it a management style, personality style? What is it that's driving the difference between a firm that really has that focus and maybe doesn't have the ability to do that? If there's any common threads that you can let us know.
The private equity funds that we see that are really successful in the market, their aim is to do something fundamentally different relative to how the business was operating before the transaction had closed. And like I said, on this example that I just shared, this was a business that hadn't done acquisitions. It largely grew steadily, and that was through a greenfield acquisition. That was an element. So they've since accelerated M&A, and I think they've completed roughly 5 acquisitions since the deal closed, call it 18 months or so ago. And then it's talent acquisition. It's building the org chart. You think about whether it's an existing holding for a private equity fund or a private business. In some cases, if you want to do something fundamentally different or transformational in nature, you really need the organizational chart and the talent to drive that. So it's, where we've seen groups become really successful is being able to identify talent very early on in the hold period. And that really sets the stage to help accelerate growth with those businesses. It's really around talent, and it's really about having that plan to do something fundamentally different and having the resources to accomplish that in really a short period of time. Historically, we talk about private equity being a typical 5-year hold, where obviously the groups that are able to enact change on a more rapid pace are able to get there a lot sooner. I think groups today are looking to do something very early, very meaningful early on in the hold period, and try to develop a plan for a 3-year hold as opposed to a 5.
That's interesting that you say develop the org chart. There's a lot of companies out there, a lot of people, a lot of managers that say, I'd love to develop the org chart, but I can't even find people that'll come to work for me. Anything you're seeing people do creatively? Is it just paying a lot more money? What are they doing to attract new associates and then retain them once they have them on board?
In terms of the private equity on the investment side, Jeff?
Yeah, at the portfolio company.
Yeah, it's a lot of it's the network. Think about the network of a private equity fund and whether it's their access to people that they've previously worked with, or that's part of it. Obviously, there's third-party groups that are out there doing, specialists in recruiting. They're leveraging those resources. And then I think for the highly motivated individual that's looking to do something different, fast-paced, and then have economics and upside attached to that, those are really some areas that would attract people to acquisitions. And again, another example would be a client sold last summer. They did 10 acquisitions with the prior sponsor, but they're looking to accelerate that and also looking at bigger acquisitions. So they're hiring a VP of mergers and acquisitions. And that's a role they didn't have in the org chart. And the buy and build is very central to this sponsor, their investment thesis. And so filling that role and finding the right talent and incentivizing the right talent. They're in the final stages of hiring for that position. But I think that's a good example where people have seen what private equity and the impact they've had, and in turn, some of the upside potential it's created. And I think those are factors that are attractive to people as they're looking for opportunities in the market.
So I want to transition a little bit. I don't know that we dug deep into this as we were talking on episode 1. You still stay very close contact with a lot of your professors from your college days. And I think it'd be awesome if you would maybe just walk the audience through your educational and career path a little bit. And we talk a lot about this is an apprentice business. And I think that sounds interesting to young professionals. I've got a ton of young folks that listen to this podcast, but maybe weave in, what does that mean? Where were those apprentice opportunities in your career and that led you to where you are at Cowen today?
So educational background, received an undergraduate degree in accounting from Michigan State. At the time, that was in the mid 90s, investment banking, at least in the world of Big Ten, was relatively underdeveloped. Had an interest in investment banking, probably barely knew what it was at the time. With an accounting degree, the clearer path to a first job was kind of leveraging that network at Michigan State, which I did. My first job out of school was at Coopers and Lybrand, or PwC, in the audit practice. And I did enjoy the field of accounting. I don't know that I loved the world of auditing. I spent the first 12 months looking for an opportunity to find a different track inside the firm, which led me into the valuation group. At the time, they had a very small M&A group at PwC. There wasn't room there, but the valuation group I thought would be a good transition from, if the ultimate goal was M&A, which it was. And as I entered the workforce, I became more interested in mergers and acquisitions. So I spent about 18 months in the valuation group at PwC, worked on a lot of interesting engagements. A lot of the work was, you learned a lot about finance and you learned a lot about present value factors and discount rates. And there was a lot of theory attached to valuation. And part of the work that I was doing was working on some valuations pursuant to mergers and acquisitions. And so got an opportunity to work on a merger of when Chrysler merged with Daimler the summer of 1998. And that was not the valuation work. We did a fairness opinion for Daimler. It was a joint fairness opinion with another accounting firm. And that gave me a little bit more exposure to M&A, but it was on the periphery of the transaction. It really fueled my interest in trying to find a career opportunity in M&A. So fast forward 6 months later, I took a job at a small regional investment bank, spent 2.5 years there, learned a lot, but was looking for something more. And then later got married and switched to another firm. And that team, where there were 6 of us that started Quarton Partners in May of 10. So that was the team I joined in July of 2001. And then fast forward to January of 19 is when Cowen acquired Quarton. So that's 20 some odd years in 2 minutes.
It is interesting, the folks that you partnered with at Quarton, you met 10 years prior, it sounds like, or maybe even further than that. And talk about those relationships that you developed early on. I had a great comment, and he said, as a young person, you're going to want to burn a bridge someday. And he said, I would advise against that. If you decide that it's worth burning the bridge, better burn it to the ground, because you're going to see these people again for the rest of your life. Any comments around that and kind of what you've seen in your career?
My first job in investment banking, like I mentioned, I spent about 2.5 years there. It was a good educational experience, but culturally really didn't align with how I operated, how I thought. And terms of values. So when I joined, which was W.I. Campbell, I'm giving you a history lesson here, Jeff. Got to work with a gentleman, Andre Auger, who I've worked with for over 20 years and consider him a mentor. My growth and success, like you said, it's never the success that you have is not necessarily you. It's the people around you. It's the relationships you have. It's the mentorship you receive along the way. And I've had some pretty good mentors, and certainly Andre was one of them. For someone, a young person looking for a career, the environment makes the job's important, the environment's important, but also the people you surround yourself with is equally important. I've had a chance to work with a lot of great people. And again, that group of 6 that we started Quarton with was, I'd consider, a core group of people that you wanted to be around, you wanted to surround yourself with, and you wanted to win with, and you wanted to lose with. And that relationship, you can't understate the importance of that. I know we've talked about that a bunch. So you try to do right by people and try to pick people you want to be in the boat with day in and day out. That's what I've tried to do throughout my career.
This is a perfect setup then. You just had a son graduate from high school. I'm sure he doesn't listen to your advice on career objectives, but what advice are you giving to young professionals right now, college students that are coming to you saying, hey, Kurt, tell me what I should do next. What should I be thinking about? Give me a roadmap. What are you telling them?
Sure. You really need to find your way. You've got to write your own scripts. Their path is going to be different than my path, is going to be different than your path, Jeff. My recommendations to people are be curious. And you've heard that a lot. I know we touched on it in my original. Ask questions, engage on campus, join clubs. You may have a view around a particular major coming into a program, but you may not know. And life is about learning, and you're going to be in a great environment when you enter that college campus. Be engaged, talk to people, ask questions, and be active, participate. Really try to take advantage of the opportunities around you. The access to resources today is it's a great opportunity for people really to do a lot more and understand what's out there. So as you think about your first step in your first job, you've done a lot of work leading up to that point and that may change after you enter the workforce, but at least take advantage of the opportunities you have before you when you're on that college campus.
I don't think I've asked any guests this yet. What podcast do you listen to and why?
You know what? One of my favorites is Tim Ferriss.
Agree.
Yeah. The range of guests are so unique, and you can tell the amount of preparation work he does. It touches on a different, in some cases, he's got folks in high finance, right? In other cases, he's got actors like a Hugh Jackman or a Matthew McConaughey. And, some of the stuff is pretty deep. Like I said, he's a pretty thoughtful guy, but touches on what makes people tick. How are you successful? And how do you stay productive? What are some of the hacks that you use to stay productive? I just enjoy his pods because he's so thoughtful, and there's some very interesting guests, some of which you'd never be exposed to had you not listened to the pod. So I think that's one that I consistently listen to, other than yours, of course.
Of course. And you said this earlier, what I found is whether it's listening to Tim Ferriss or any other podcast that interviews successful folks, and after doing 100 episodes, there's a lot of commonality between successful people, no matter what industry they're in. And I also listened to Tim Ferriss and was comparing, because I listened to them almost back to back, Matthew McConaughey and Jerry Seinfeld. And there were some really interesting common things that they talked about. And as you said, a lot of my guests talk about curiosity and drive and all the grit. There's a lot of common words to success. I know you shared a quote, motto way back when. Do you have any new favorite quotes or mottos that you're repeating right now?
I'll give you one that's a little old, but it's relative. It's related. It's Henry Ford. And the quote is, whether you think you can or think you can't, you're probably right. It's about having that grit and that tenacity and that drive to succeed. And, I think that's in this day and age that we're a lot of different things being thrown at you, trying to stay positive, trying to stay disciplined and consistent. That's a quote that kind of sticks with me and, helps you kind of keep things into proper mental space in terms of just staying after something and being committed.
Well, I love that one. And it really talks about our biggest competitor is actually between our ears. It's ourselves.
Yep.
And
yes.
I think that was one of the big struggles that I saw in COVID is that mental struggle of just dealing with a new environment, dealing with lockdown, all the things that we had to deal with. In fact, I babysat two grandkids back to back the other day, and I was like, I don't know how people work with babies running around the house. I gained a new appreciation for what a lot of the parents had to do during COVID to manage all that chaos. And my last question that I always ask at the end of every podcast is if I'm a private equity firm or a CEO, a multi-generational owner, what are the things that you want me to remember tonight as I'm caucusing with my constituents, whether it's my spouse or co-investors, to determine which investment bank I'm going to pick to represent me? What are those key words that you want me to remember tonight about Cowen and Kurt Harris?
I think for a private equity fund, it's a very important transaction. For a private business owner, it may be your only transaction. And if selected to be your investment banker, you're going to get the right team and you're going to see me from start to finish, and we'll be actively involved. We'll have your best interest in mind, and we're going to run the right process to deliver the optimal outcome for you. Could be value, could be terms, could be partnership, and could be chemistry. It's a 24/7 job, and you'll have the full commitment of the firm and me personally to make sure we deliver the optimal outcome.
Well, Kurt, I very much appreciate your time today. Appreciate you doing the podcast with me the second time. And I've seen your process. I've seen your guidance. In fact, I remember back in 2016, you helped me walk through a decision to roll out a new category in the North Star world in the core middle market. And we talked about that and the Sea Island Summit. And so you've been a great mentor to me over many years, not only in all the events that we help organize and support, but also in the Lockton world. Very much appreciate your friendship and guidance.
No, you bet, Jeff. It's been great to get to know you and build this relationship. And you continue to innovate in the industry, and innovation is not necessarily that prevalent. Love all the things that you're doing, and certainly love playing a part in it. So thanks again for having me on today.